Good morning or afternoon, everyone. It is Nate G. It is Tuesday, March 12th, and we're going to do a trade setup on MCK. And then we're going to follow that up with a trade setup on Netflix, but we'll do a secondary video for that. MCK is here on the 78-minute chart, is in a great squeeze. It's I'm not sure if it's showing up as an A plus on SAM or not. We can check. We've got a trend, we've got our pattern, and we've got a squeeze with upward momentum at the moment. Yellow into blue, into light blue. I like this trade, and we should be near all-time highs. All-time? Yeah, big time all-time. So we are just under this sort of what level would this be? 537.62. So I'm going to do this trade setup on the 78-minute chart. It ticks all the boxes. It's probably in a 130. It's probably like Netflix. It's in a 130, but it's not an A plus setup yet. As you can see, we don't have rounding upward momentum, but it probably will be here shortly. Because this thing looks like a beauty. So let's go to the 78-minute chart and start our normal setup process. Okay, we're going to come and we're going to put in a intermediary value area high. Oh, I got to change that's going to go there. And I want to get rid of the dots at 529.40. I'm going to come in here and use the bottom end of here as a low at 523.18. We're going to play within that range, and then I'm going to come put at 526.54 a point of control. And then I'm going to come up here and put a high. I'll make this one green for target number 1. And then I'm going to run this pullback and put a target number 2 up there. So target number 1 is 535.96. Target number 2 is 539.94. Okay, so now that we have our primary lines in here, we're going to have a secondary value area high up here, which I'm just going to put in gray so I know kind of where it is. And then above that, it's kind of smooth sailing. So now that we've got our major lines on here, I'm going to jump down all the way to like a 10-minute chart. Okay. And now I can see this pattern playing out a little bit more. You can see I need to adjust my point of control is perfect. Somebody was just in here. Kim, you're asking how I figured target number 2. Target number 2 is a Fibonacci extension, high to the low, and it's 1.272%, the 1272 extension using Fibonacci. That's how I got that. So my target number 1 is a touch of the most recent high, and the target number 2 is that 1272 extension. Okay, now I would like to pick up this trade off POC, okay, which is 526.58, because as you can see, we move up into that level, and then we come and we bounce off of that level, and we move up into that level, and then we either push through and come down, right? This is our point of control level, and I would like to, because we're above it, I'm hoping that we hold here and that we come down into our point of control level, and that'll be my first position, first spot to take a position with the 523.18 as my stop. Okay, so we're not ready to take a position yet in this. So I'm going to put a alert just above my horizontal line, my POC line there. So it alerts me. And then I'm going to put my long position at that level. And I'm going to move my stop to our stop point, which is $3.33. And I'm going to move this up to my target number 1. So I'm risking $3.33 to make $9.47. That is almost a 3-to-1 risk reward, right? If I can get this off of this level down here, that's an even better risk reward, but I'm pretty happy with 3-to-1 risk reward on this trade. And if I leave any sort of trailer on, you know, I'm coming into basically a 4-to-1 risk reward for my target number 2. So we haven't decided that yet, Mary Jane. We're just setting up our trade. We're going to do that next. So your question is timely, right? R Smith, you just need to grab the chart and slide it like this. And then if you use like your scroll wheel, you can slide it in or out, and then you can grab it to slide it up or down. And then if you need to make it, wider, you just grab the sidebar here and slide up and down. That's how you move the charts around. Okay, so now that we have our trade plan in place and we have an alert off of POC or lower, so if it pushes through POC, we're going to get an alert, which means we're going to watch for an entry spot in this red area here to ensure that we have a 3-to-1 risk reward or better. So then I'm going to come over to our option chain. And I'm going to look at these MCKs. I don't want to do this week's because that's too short to play a 78-minute chart. Next week's, we're, it's a 40-50 cent spread. That's maybe okay. And then as we get further out, our spreads really start to open up. So this is where I don't love this as a tradable, because we get pretty spready, right? That's over $1 on our spread. So if you wanted to play the options on this, I kind of like these 530s for next week. Right, we're about a 40 cent spread there, so I would be going with the 530s. Okay, so then my trade plan, and you saw me on the last one write it all out, but this is entry POC at 526. What, 58? Okay. Stop would be 523.18. And then I would my strike would be the 530s. Actually, I'll just say the 322 530s. And then my risk, actually, let's just do 530 Cs. There we go. And then why won't that go lower? Okay. And then I'll put risk 3-to-1. Okay. So now my trade plan is on my chart. And I can even, before I do that, let's call this a 78-minute TPS trade plan. Okay. Any questions on that? So now whenever I pull up my chart, I've got my trade plan on here. I've got my targets, my green targets, target number 1, target number 2. I've got my stop level. And we have a plan in place. Mary Jane, which chart? Yeah, trade cost would be, for one contract, would be about $6.90. That's correct. So this might not be the right trade. So let's do this. If we're buying a 50 delta, right? This is a good practice. If we're buying a 50 delta and we are risking, let's just say we're risking $3, okay? So we're risking $3. Wow, that's an awful dollar sign. We're risking $3 on a 50 delta contract, and let's say our contract is worth, let's say we get it for $7, right? So $700. How much are we risking per contract? Roughly. Right, we're risking $150 per contract. Right? That's our risk. If we stop out right here. So really, at a $3.33 risk, you might as well factor for every contract you're putting on, you're risking $200. Okay? Per contract that you put on. So if your max loss per trade is $250, let's just say, I like to use that round number. Let's say you're the most you put into a trade is 1,000, and your max risk for that trade is $250. How many contracts can you buy here? Really? You can buy 4? Right, 1. Because if you buy 2 contracts with this risk profile, you're now risking $400 for this trade, and it exceeds your max risk. Luckily, it would also exceed your max contract or max trade, because at $700 this would be a $1,400 trade. So in that respect, right, you could buy 1 contract if these were your criteria. But you have to know what your max trade is, what your max risk is, and then when you're putting on your trade, how many contracts you can buy to fit within that, right? Sometimes the risk would be higher, and so you could buy 2 contracts at $1,000, but your risk would be more than $250 for that single trade. So that's our trade plan for MKC, and we'll do another one here on Netflix.